Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News, and got a really special guest today, and Mike Connard. He's the CEO at Vizsla Silver. I'm a big fan of silver projects, especially in Mexico, and they had a spectacular preliminary economic assessment out just recently in the last week or so. And what stood out to me from that is that it has a relative to a lot of projects these days that have billion-dollar plus capex to build them. This one came in at about a little under 250 million. That's the kind of price tag that a junior can handle. And what is most impressive to me is that the payback of that capital would be, or that capex would be in like 9 months. And the reason for that is that it has a tremendously high internal rate of return at about 85%. I've been doing this for a long time, folks. 30 years I've been in this business, and I can tell you that these kind of numbers are very rare. And so I wanted to talk to Mike, and thanks a lot for joining us today, Mike.
Thank you, Alan. It's my pleasure to be joining you here. And as you said, it's been a very exciting time for us. This PEA is it's exceptional. I'm excited to be able to talk about it with you today.
Well, living in Mexico, I know a lot about epithermal veins, and they often appear in clusters. And one of the first tricks of that, figuring those out, is to find the boiling zone, or some call it the bonanza zone of an epithermal vein. And so, what you have already found applies to the other veins in your system. So, not only are you starting out with a great preliminary economic assessment, you got room to grow as well.
Yeah, exactly. And we've this PEA really only represents such a small portion of the overall district. And as you said, over the last 5 years, we started basically exploring this project in earnest in late 2019. And since then, we've learned a heck of a lot more than we knew when we started, that's for sure. And so we were able to be a little bit more predictive on certain veins. But, to have a PEA and have, high confidence level drilling completed here at the Copala vein and the Napoleon vein, that really helps us when we want to go and look for other targets across the district, which is what we're doing. I'm actually here in Sinaloa right now. Our team is we're focused on driving the project forward with the PEA and the test mining later this year. But exploration is very much in our DNA. So we are planning on doing more exploration later this year, which is it's pretty exciting because we've got a whole district to explore.
Well, you guys got to be over the moon to see a capex within the reach of a junior, and that tremendous IRR just is spectacular.
Yeah, when we set out to put these economics around the project and to start to contemplate a mining scenario here, it really had to do with a manageable capex. I'm sure many companies probably have the chance to look at something that they could start themselves, or they want to build something that has the highest NPV, or very various different kind of thresholds that they think will be more attractive to a major, to whoever's going to buy them. But when we started out on this, we thought to ourselves, the only thing we can really control is what we do. You can't control a major coming to buy you or anything like that. And that mentality grew and grew, and we determined that we wanted to be the company to drive this forward. So having it's our vision statement. It's in the beginning of our presentation. We want to become one of the world's largest single asset silver primary producers through our project here, and we think it's very possible. And so that capex is really important, and I'm really fortunate. I've had a couple of incredible mentors. One of them is our chairman, Craig Perry. And then, Simon Smirlik, who's now our COO, was originally an early director of the company, but he's a mine builder, bona fide mine builder. He built 40 mines across the world with his Ausenco hat on, and more recently, we talked about Las Chispas before, but most recently, Ausenco completed the lump sum build for Silvercrest on Las Chispas. So, when we thought about, okay, how are we going to actually make sure this capex is based in reality and actually achievable? Simon's experience was very, very important to that, because he knows exactly how much it costs and what it takes to build an operation very similar to Silvercrest, and that's what this is. It's a very similar flow sheet.
Totally.
Yeah, so it's really exciting for us because we feel like this is the beginning of the potential of building something multi-generational here with this project.
And Silvercrest is a good case study because what got me really pumped is I started featuring them in my reports when they were going through the development discount window and at that sweet spot before they brought it into production, and then since they brought it into production. And one of the key things that I think has led to their success, folks, is the IRR. Because I keep on talking about they had going into full commercial production, they owed $100 million. Coming out of full commercial production, they had paid off all the capex cost, plus they built up more cash, gold, and silver assets than the debt. Plus, they paid off, excuse me, $23 million in taxes and bought back their own stock. These folks are the kind of things that happen when you have a tremendous IRR like at Las Chispas and at Vizsla's project as well.
Exactly, and that was also very important to us to prioritize early cash flow. We looked at a few different mine designs when we were working on this, and some of the original designs really didn't prioritize the high grade material that we have here on this project. And we're very fortunate to have Copala, which I think is probably one of the biggest and highest grade new discoveries in Mexico in recent history. I mean, it's a mile long, it's 10 meters thick on average, and it's very, very high grade. In some places, well over a kilo. So you have this combination of thickness, near surface, and then a huge strike length. And that Copala area, some of it is what we've been drilling recently is just it's incredible. It's like a jewelry zone there. It's
Jewelry
really
box.
jewelry box, exactly. So we prioritized bringing that stuff up earlier into the mine life, and that's what gave us that quick payback. That's so important. And you're right, cash flow is so important to servicing debt, also to getting better debt terms, and even better project finance terms, so that you're not having to sell streams, and you're not having to do punitive financings to raise money to build the project. We think it's going to be really conventional in terms of the finance mix that we use to build this. So, like you say, with Silvercrest, they were able to pay off their debt very rapidly and become, a cash flow machine. That's something that we endeavor to do as well.
That's what I call it, a free cash flow machine of a mine.
Well, and the best part about that is that you can start to explore with cash flow instead of diluting shareholders. So it's we are shareholders, of course. That the core management team were very. I mean, I was the first shareholder. I started the company back in 2017 as a private company, and took it through an IPO process and listed it in 2018. And then we found this project in very early January of 2019, and spent about the rest of that year kind of bringing it together. But over that time, we've been shareholders. We financed the company. At one point I was running it on my credit card, essentially, that type of thing. So we are a management team that's kind of allergic to dilution.
Yeah.
When you think about how to finance these projects, it's very important for us to minimize that shareholder dilution. It's not, it's obviously not avoidable. You have to suffer dilution to get to where you want to go in some cases. But we think that, because of the high grade nature of the Copala area, that's going to be the beginning of mining. The drilling that we've been doing, the test mine that we want to do to stockpile mineralization ahead of the mine, the mill build. These are all things that banks like to see, and I think we'll.
And you can do all that, right, Mike? Because this is a permitted project, if my memory serves me.
Yeah, so the test mine is permitted. We were able to permit that relatively quickly here and at the project, but we still have to submit our MIA. That'll be later this year for the entire project. But that's why this PEA is so important, that it really informs that permitting process.
So, Mike, I am a big fan of Pierre Lassonde and his Lassonde curve, and I like to put projects in there. So, in a way, you're moving up that discovery side, the left side of the Lassonde curve, and starting to get into the development phase, and then move towards the second peak of the Lassonde curve. Now, sometimes that development window can take a very long period of time. And part of that reason is what usually kicks it off is the initial resource estimates. And then those can sit on the shelf for sometimes years. And it's because companies are reluctant to put the economics on them, and because they probably don't stand up. And so you guys quickly did a mineral resource, I think an updated resource, then threw the economics on it. And why I'm explaining all this to my audience is that I think you guys can really narrow that development window down. And I think that a lot of exploration and development companies talk about, they want to be taken over. I've been in this business for 30 years, Mike, and I've seen first of all, how much we need new miners and how lucrative it can be for the shareholders. We've both come from Vancouver, I think, Tech Corp. That's how they built their company. And so how do you feel about what I'm explaining about that development window? I think you guys are doing the work to narrow it quite significantly.
Exactly. And we've always kind of spoken to that. I think the nature of our project being a brownfields project, and we originally in the property deal we did buy a mill, and the thought was that we could kind of buy out that down dip in the Lassonde curve. We thought, okay, we can move very quickly into production, and that's that was good. We thought, okay, well, if we get to 60-80 million ounces of silver equivalent, we'll be great. We'll put it through the mill, and then we quickly realized, okay, this is a lot bigger than that. We're going to need a bigger mill, so to speak. And we realized that just because we weren't using that mill, the brownfields nature and the infrastructure of this project was going to help us really move very quickly through that Lassonde curve and into production rapidly. So, a good way to explain that is, we drove 400,000 meters on this property now, and we've done that without having to build any roads of our own. We just used existing roads. And we were talking earlier about, the infrastructure in Mexico, and there's high tension power that's running over the mill site that we've selected. There's probably within our area, there might be 600-800 people, within a close vicinity, that probably all of them have some sort of family history of mining, but I would say more than half of them are probably miners that work, either formally or informally across the area. And then you have the town of Concordia, which is about 70,000 people, all, very, it's a kind of a service town for mining. So you have all these things that, if you were to compare that to building something in the Golden Triangle in BC, you can buy out years and years of development and expense. So that's why the capex is so low. And that's why we're not afraid to state for silver in 2027. That's our goal. And to speak to what you said there too earlier about the companies like Teck, and I even think about Pan American and some of these great companies that were built in Vancouver in the last cycle. Certainly our goal. I've been doing this for almost 15 years. Certainly not as long as you, but I don't have any. I want to work in this business for a very long time, so I don't have anything better to do. If we were to sell the company, we just have to start another one. When you have something that's this special, of course we're people that are, we're kind of intelligent business people as a group, I would say. So if someone were to come along and make an offer that surpassed our expectations, you'd have to think about it, because we have to do what's best for shareholders. But I see a lot of value in building the next major silver company out of this asset, because it's not every day that you actually are lucky enough to make discoveries like this and consolidate a district like this. And so it's kind of that cash flow, to go back to what you said, the cash flow engine that can really build a serious business here.
Well, I want to talk to you about that because, first of all, I love the attitude that you want to build a company. The idea that if you go out there and keep marketing yourself that we're going to get taken over, we want to get taken over, we want to be the next Great Bear.
Yeah.
Have at it, my friend. But the reality is, to get there, is that if you want to get taken over, the best way is to push forward as hard as you can to build a mine. Then the bigger companies realize, whoa, these guys can build a mine, and we're going to have to pay a lot more down the road. But my hope is that you guys actually get the chance to build another company like a Silvercrest, which could launch you into being something like a Pan American Silver. And the reason that I say that is the industry needs, in the last cycle, the 2001 to 2011 bull market, a lot of developers were taken over, a lot of mid-tiers, junior miners, explorers, and they kind of, the majors with their checkbooks, they kind of, made a void. And by making that void, it creates a phenomenal opportunity for a growing junior miner that can grow into a mid-tier, because there's a lot of projects out there that aren't big enough for a major, but could be mid-tier size, or projects that could grow a junior miner into a mid-tier. I love that potential.
Well, we're glad to hear that, because, and the other thing is that we love, so I think you and I probably have something in common. We love Mexico, and for me, there's no better place to be looking for silver than certainly in Mexico, but also in where we are in Sinaloa, because it's been overlooked. The decade ago, there was a little bit more violence in the area, and because of that, it was an area that not a lot of companies went out and explored. And if it was over the border in Durango, it was really explored. And other states like Chihuahua and Sonora have seen a little bit more exploration historically. But there's a trend between San Dimas to our north, about 80 kilometers, and then Panuco, where we are. So it's about 80 kilometers south from San Dimas to our main district. Now, we bought another project that's over 10,000 hectares in between San Dimas, actually equidistant between San Dimas and Panuco, that we think has all the hallmarks of could be another major silver district, just like Panuco or San Dimas. So, our thought is, well, we have a competitive advantage here. We have an incredible team. Our team of geologists led by Jesus Velador and Fernando Martinez, our director of projects, Fernando Riuda, who's our country manager and director of Mexico here. These are all guys that have multi-decade experiences with companies like Fresnillo, First Majestic, and others. And we've got this great team. We've got a foothold in this region. We've been able to consolidate more and more ground on this trend. We see the future for silver, actually being here in Sinaloa. So we're excited about that, and we want to build this mine basically as fast as we can and start to explore the rest of these concessions that we have, out of cash flow. But that's kind of the big picture. if you were to zoom back into our project as a whole, you look on our corporate presentation, we've drawn a polygon around basically the area of the PEA, just a tiny area on our map. It's less than 10% of the veins that we've explored so far.
I saw that.
Yeah. So, either way, this is kind of one of these, I would say one of these generational assets. And so we're thrilled about that. Now, if we reach our stretch goal, of course, I've said this before, but our goal is to achieve that 15 million ounces of silver equivalent production annually. And that's what the PEA contemplates over the life of mine. Now, the first 2 years are closer to 20 million ounces, and 20 million ounces is, a top 5 silver equivalent producer globally. If we continue to improve the project between now and the feasibility study, which is planned for mid next year, we may end up being the world's largest single asset silver primary producer. And if that's the case, we'll have to, the acquisitions that we might look to do, or, the growth, I think would all have to be something that would be comparable to what we have now, which is, could be very, very significant. So we're excited, and we think it's a great position to be in. And, this PEA has really kicked off the development of the project in earnest. But as I said, we're still exploring, which is excellent.
Well, that brings me to, I kind of went back, I went ahead, and now I want to go back. We talked about the big picture opportunities for a high growth junior miner that wants to be a mid-tier, and how few there are that are focused primarily on silver. But now I want to bring it back, like you said, to your project in particular. And you've brought up San Dimas, which makes me think of First Majestic, which makes me think of the trend of epithermal veins at Silvercrest Las Chispas. It actually starts at, well, the first mine in the area was Ermitaño, which is one of First Majestic's best mines. And that corridor of epithermal veins, there's about 40 of them in there. It goes from Ermitaño to Las Chispas. And there's an entire corridor, actually extends beyond that, but there's an entire corridor there that they're both using for growth. And you kind of have that entire package sort of similar on your project. So you have a lot of room to grow. This is a way epithermal vein mines start, folks. They have good economics. They have let's say a reasonable life of mine in the initial estimates, in this case 10.4 years, I believe. And then they keep growing and growing and growing and last for decades. That's the nature of these epithermal vein clusters in Mexico. And so you guys have only really tapped the tip of the iceberg for your entire cluster.
Well, yeah, exactly. And you could look to San Dimas or the Fresnillo district, or, any of these billion ounce districts in Mexico to see what we're hoping is there. But if you kind of just break it down into pieces, we have, well, last September, we cut off we didn't stop drilling, but we did our resource cutoff for this resource that we published in January. So the most recent resource that we have is 325 million ounces globally. But that was a cutoff in September. Of course, we've been drilling since then. We've drilled in some extremely high grade material recently that we put out news on in the last few months. So, I think it's safe to say that there's going to be an increase over the 325. Let's just say there's 325. We know that there's been about 100 to 150 million ounces taken historically from the project, from the Animus vein in that area. So we're at, pretty close to 500,000 ounces there. And then again, we've only explored about 10% of the overall veins in our district proper, but we've tripled the land package in the last few months here since the beginning of the year. So, we're convinced that this is going to be one of these major vein fields in Mexico. Like you said, these stacked, or what we have is more parallel veins that run, basically kind of north south, generally run north south, northeast, and they run parallel to each other. Napoleon's about 400 meters west of Copala. West of that is La Luisa. There's a couple of other veins to the west of that we haven't really explored that well yet. And then east of Copala, we have a number of major vein corridors that we'll start to explore later this year. And then, to the south, we just bought the San Enrique concession, which is about 10,000 hectares to the south, which the Copala and the Napoleon veins trend onto. We haven't done any work on that yet. And then again, the Lagara Metates district to the north, about 40 kilometers to the north. And we see a lot of similarity between these veins, but what we really want to do is replicate the success of a San Dimas, and as part of that, this is probably one of the things that I'm most excited about, is that we were able to bring Eduardo Luna onto the board when he retired from the Wheat and Precious Metals board, maybe about, I guess it was about maybe 9 months ago, probably closer to a year, and. Eduardo had started his career with Luzman at the San Dimas mine. And, he spent, I think, 3 decades there or something like that. And then he went off when Frank Justra and Ian Telfer bought the mine from Luzman, bought San Dimas from Luzman, really to build Gold Corp. It was called Wheaton River at the time. They made the acquisition, and then they were able to, to build Gold Corp out of that cash flow. And so he's got that experience, and then he went off, and at the same time was one of the founding directors of Wheaton Precious Metals, which of course the silver stream from San Dimas was really the cash flow generator behind that. And I took Eduardo down for a site tour the first time, and he said, "Mike, this, what you have here is San Dimas on a sidewalk," referring to the fact that, of course, it's on the side of the highway.
Yeah.
And so that's kind of, of course, we have these hopes when we're starting the company up and making discoveries. We're excited about things, and we hope that things are going to turn out the way we want. And then when you have, people with that much experience and kind of wisdom in these districts, see what we saw and kind of confirm it. We were just thrilled about that. And now, of course, flash forward about a year or so. And it's really starting to come together to be one of these big, long-lived districts in Mexico. And we love it. It's great. We love Mexico. We love Sinaloa. Sinaloa is an incredible place to operate as well. And so I think this PEA, it's the start of something really special here at the project.
Well, you also mentioned Fresnillo. And that's one of the granddaddies of the mining in silver in Mexico. 10% of the silver ever mined in the world has come from the state of Zacatecas. And Fresnillo and Zacatecas are what makes up all that historical mining. Fresnillo has been in production for 500 years on a cluster of epithermal veins that is about 2 kilometers by 1 kilometer. You could fit that easily in your project, but then they found beside that, they found another series of veins, and then right beside that, the mag silver. And why I bring that up is because Fresnillo and mag silver are the 2 lowest cost producers of silver in the world, and what they have, you could fit in your group of claims a couple, maybe 3 or 4 times. So yeah, this is a very impressive project with a remarkable preliminary economic assessment.
Yeah, we're very happy with the outcome, and I think you kind of touched on just now what we think could be possible. Of course, these are all pretty forward-looking statements, and
absolutely. Do your homework.
But I think what's important is, of course, just to take a look at the PEA and see for yourself. This is something we did conservatively. It's funny, some of the, I suppose, the criticism or, feedback that we've actually really the only criticism that we have had on this is that the metal prices were too high. But of course, it was bank consensus, long-term bank consensus prices, pricing at I think 1975 gold and 26 silver. At the time, silver was right, trading well into the 30s. So, we felt fairly conservative there. But even if you were to look at our sensitivities, negative variance to the metal price, 20%. It's still incredibly high IRR and an excellent NPV, and so this project is relatively insensitive to that. And I think the key there really is that grade and that early cash flow, making basically paying it back in such a short period of time.
Yeah, and you're really, with that kind of an IRR, that's the wonderful thing about that, is that you're capable of going through cycles. Silver goes down to 20 or goes up to 50, you're still in good shape and it'll only get better. So that doesn't really concern me at all with that high IRR. I think before we close, I'd like to ask you about Mexico. I live in Mexico. I've lived here for 7 years. I've been in the mining business for a long time. I understand the strength of the mining laws and that those mining laws are protected in the Constitution. I see the rhetoric by AMLO and others, which then gets spread out all over the world and gets misunderstood. Let's talk a little bit about Mexico, because there's a big difference between trying to build an open pit in Mexico and an underground mine in Mexico. There doesn't seem to be any opposition whatsoever to underground mining.
Yeah, I agree 100%. And so AMLO has been the most vocally outspoken against mining during his administration. They didn't issue any concessions or anything like this. It's very clear that it was difficult administration for mining, but two of the biggest, the most successful companies recently, so Silvercrest and Meg Silver, were both permitted during that administration.
And Orla.
Orla, yeah, exactly, yeah, and other exactly other pits. So we do know that it is possible to certainly it's very possible to get permitted. Of course, we were permitted for our test mine recently as well. And I think there's a big distinction between open pits and the water use too. That's kind of the water is really the issue
Yep.
in a lot of cases. And so if you solve for the water, permitting is relatively straightforward from what information that we have. And I suspect that this new administration will actually be more pragmatic and more business friendly for mining. And I say that because I have some friends here, of course, here where I am in Sinaloa, and they know Claudia well, and they have people that I'm connected to have family in the government, in Claudia's government, and I'm hearing a lot of positive news out of that. So we suspect that if we just kind of keep our head down, do what's right here, have alignment with the community, which we do. We have 30-year HEDO agreements for production with all of our HEDOs. And we've been, since we started here, we spent hundreds of millions of dollars on the property, and we've employed 70% of our workforce directly from these communities, and the rest 99% from Mexico. So
Wow.
it's a net positive to Mexico. We use disturbed areas wherever we can. So this is a district that's has 400-year mining history. There's a lot of disturbed areas from mining, and so our test mine portal for Copala will be using area that's already been disturbed from historic mining. So, and then our goal is to have the mill basically be the mill that no one ever knows about, because it's out of sight, and noise pollution is minimal, and underground mines, so we really want the only legacy to be the economic benefit in the community. Tailings are done in a responsible way, and a lot of what we're doing is paste backfill, so a lot of those tailings go back underground. all these things we started out with basically, how to benefit the communities. I mean, we're really just a guest in this area from Canada. So, we think about it from that perspective as well. But, we feel very positive about this administration and the
Yeah,
potential.
I'm with you there, and I don't think it's wishful thinking. I watched the campaign very closely, and I got the sense immediately that Claudia would be more practical. But one sign that she is just look so far at the people she's brought on her team in related to mining and saying very good things. I mean, they want to do things right. They want to. Water is a concern, so and the local involvement is a concern, as it should be.
Yeah.
And I don't think that there's going to be any problems. And, you know, I love to hear that you're using all the Mexican people. And companies would love to do that in lots of jurisdictions, but the trouble is that they can't because those locals are not well trained to do that work. In Mexico, you have ample people you can use for everything: metallurgical work, mine building. I mean, the reason that this has such the country has such a phenomenal network of infrastructure is because that was all, everything has been built around mining. Every city you go to, every community you go to outside the major cities, that was all built around mining. And that's why, the roads actually do a lot of the prospecting for you because they tell you where the mines were historically and currently. And so I think that the perception of Mexico has gotten out of hand. And in the meantime, just keep doing your work, Mike, and employing. And, I think the big thing that Claudia will understand is how the high paying jobs in the country come from mining. And I don't think that will be lost on her.
Yeah, absolutely. No, I couldn't agree more.
I'm going to close it off, Mike, because I've taken up a bunch of your time. Was there anything else you wanted to close it on?
No, I first of all, I just want to say thank you for having me. It's been great to have this conversation. I appreciate it, and it's great to talk to someone who shares the same passions for for Mexico mining that we do. So thank
I
you for.
moved down here 7 years ago because I just saw great geology and roads and power everywhere that lead. You go look at any property in Mexico practically, and you can drive right to it. Like I spent a lot of my career in exploration in Canada where you got to fly to a remote location, then you got to have a helicopter get you there, then you got to build a camp. Here you drive to the project, driving beside power lines, and there's a community right beside it full of guys who understand how to do mining work. And it's why I moved down here to Mexico, Mike, and I'm never leaving.
Yeah, perfect.
I'm gonna have to come up and visit you guys, have a property visit, because
Oh, anytime. Yeah.
yeah, you're not that far away from where I live. I'm in central Mexico.
Yeah, it's pretty close, I think, as there's and the new highway, of course, is the one that drives straight through our property.
Oh, I have no excuses,
Yeah,
Mike.
exactly.
Okay, I'm gonna close it off.
All
So
right.
there you go, folks. I started talking about an incredible preliminary economic assessment that has a capex that a junior can develop, and tremendous payback of the capex and wonderful IRR. We talked about opportunities for growth of the company uh, outside their project and in a big sense, as well as on their project. And so here you have a company that's moving quickly through the development window of the Lassonde curve, plus very focused on exploration as well, which gives them that kind of potential for the first left side of the Lassonde curve. In a general sense, like I said before, I've been in this business for 30 years. I know how rare it is to have a project with these kind of numbers. And I think they've got a great growth story ahead of them, not just in the short term and then into building a mine, but beyond that as well. So as always, my shows are for information purposes only. Important to speak with your financial advisors and do your homework. These guys do a great job of telling their story in interviews like this, in news releases, in corporate presentations. Do that homework because I think you'll find a very attractive company to jump on the bandwagon that I think will last for a very long time. On that note, have a great day and we'll talk to you soon.